get help, get expert help, whether that's a mentor, a coach, a senior partner, even just going out and reading 100 blog articles and listening to 100 podcast episodes. That is better than what I did. So get help from experts. Find someone who's done it before you. Learn from their mistakes. You don't have to make them yourself.
Welcome to Multifamily Insights. I'm your host, John Casman, and I want to thank you for joining us for another great episode. Listen, if you're enjoying this show, I need you to do me and yourself and all the other listeners a quick little favor and leave us a rating and review. That helps us get feedback on the show, but it also helps other people find the show and get some of the insights they need for their own investing needs. We also want that honest feedback. So if there's something you want to see more of or something that you'd like to see, just let us know so we can get that information up on the show. And listen, as an avid listener, share this episode with someone else. And if you haven't done so already, make sure you hit that subscribe button so you don't miss an episode. Now, today we're going to be talking to Brian Davis. They say you're the average of the 5 people you spend the most time with. So if you want to grow as a multifamily investor, you have to spend more time with other multifamily investors. And an easy way to do that is to join our apartment investing mastermind group today. Just go to casmancapital.com and click on the mastermind button. Now, as a part of this group, you'll get access to expert trainings, group coaching calls, industry news and updates, as well as all of our webinars and workshops, including our 3-hour workshop on raising capital. Again, if you want to be around other multifamily investors that can help you scale your portfolio today and grow your network, make sure you're a part of the Apartment Investing Mastermind. Just go to casmancapital.com and click on the mastermind button today. Brian Davis is the co-founder of SparkRental. Now, their mission is to help everyday people reach financial independence through real estate investing. They run a real estate investment club to let members combine their money and invest in huge real estate projects with small amounts targeting 15 to 30% returns. Let's welcome to the show, Brian Davis.
John, thank you so much for having me.
Absolutely, Brian. I went over your bio at a very high level. Why don't you take 1 or 2 minutes and fill in some of those gaps?
Sure. So I got my start investing in rental properties, single family rentals directly. I actually got my start working for a hard money lender and doing loans. But, this is back in like the early to mid aughts. I'm watching all these guys make money hand over fist in real estate investing. I'm like, I can do that too. I'm smarter than these guys. I'm going to do this. So I went out and I invested all of my money in rental properties, right at the worst possible time in human history, right? And spoiler alert, of course, that all came crashing down in 2008. So I found myself upside down on all these properties, negative cash flow on all these properties. I didn't learn all the things that I should have learned before going out and investing. So, and my day job at working for a hard money lender, that all dried up too, right? Because no one's buying and renovating properties anymore in 2008, 2009. So I licked my wounds. I went and got a job working for an e-commerce company that was selling services to landlords. And in 2016, left that job with a former colleague, and we founded SparkRental. And that has been a winding journey in itself. But what we are most excited about today is our real estate investment club, where we basically pool money together as a club to invest in big passive real estate syndications. But we allow people to invest small amounts of money in those big projects. So instead of the 50 grand, 100 grand that people normally have to invest in a real estate syndication, that's 5,000 is the minimum if you invest as a member in our club. So that's like the really high level thing about, where I came from, what we're doing now. We do all kinds of other stuff at SparkRental too, though. We have interactive maps for active real estate investors. We have a bunch of calculators and free tools and courses and landlord software and all that good stuff. So happy to dive down any of those rabbit holes that that appeal to you.
Yeah, man. Listen, playing it back, you were, started off, working for a hard money lender, started investing yourself in rentals. Timing wasn't ideal. You ended up losing those rentals. You go and get a job at an e-commerce company, and eventually you and one of your colleagues, you leave and you start SparkRental, where you're at today, running this firm. And obviously with that experience, you learned a thing or two going through the last financial crisis, and I'm sure you're applying those lessons moving forward. You do a lot of education. So you talked about interactive maps and tools and different resources that are available, all the SparkRental resource. Talk to me about kind of, your main objective, right? Is it education? Like, what exactly are you hoping to accomplish with the SparkRental platform?
Sure. So we are really big on education. I mean, we have over 400 articles on our blog. We do a weekly podcast. We have free courses, a paid course. We do webinars and all that stuff. So we're really big on education, possibly because I wish that I had more education when I first got into real estate investing. I probably wouldn't have lost so much money on it if I had gone out there and gotten the education that you really need to consistently make money in real estate investing. So yeah, education is one of our core values. We're also really big on uh, access to everybody, right? We have one of the things that we feature on our website is a big comparison chart for real estate crowdfunding platforms, and our emphasis is on those that allow non-accredited investors, um, and in particular those that allow smaller minimum investments as like a really easy way for someone to invest $10 or whatever as their first real estate investment. You can go out and buy publicly traded REITs, of course, but I don't love REITs. Too much correlation with the stock market, and we we have a whole article about that, like breaking down the numbers for that. Um, but yeah, I mean, as a next level up, real estate syndications are a great level above crowdfunding, and another place that's easier to start than going out and buying rental properties directly, which takes a ton of work, a ton of skill, many different skills. Um, so that is really why we created our club as a easy entry point for just average middle class, Joe Sixpack, as they used to say, just to get their feet wet with real estate investing. Invest a few $1,000s if that's what they have, instead of having to go out and either invest 50 grand or whatever in a syndication by themselves, or it usually takes about the same amount of money to buy a rental property between the down payment, the closing costs, the initial repair costs, cash reserves. So it takes tens of thousands of dollars to go out and buy a property by yourself. And that says nothing of all of those skills that you need to learn, like how to negotiate and manage contractors, right? How to work with city inspectors and get permits, how to screen tenants, how to collect rents, how to file evictions, all that stuff. I mean, there's a million, how to raise money or borrow money, how to get financing. There's just so many skills required to succeed as a real estate investor if you're going out there and investing in properties yourself. So there's a higher barrier to entry to that than most people realize. And we want to make sure that people first realize that, but then make sure that they have the skills that they need if they are going to do that, if they are going to go out and invest actively, or if they just want to diversify their portfolio to include real estate. We want to make sure that they can do that pretty easily as well with relatively small amounts of money.
Right. I like the way you frame that up, right? So first of all, I think you and I obviously are talking to each other, and anyone listening to this believes in the power of real estate investing. Otherwise, you probably wouldn't be listening to this
Wouldn't be
podcast.
here.
With that said, it's much easier said than done. And the challenges you brought up, I think, are real challenges people face, right? You might believe in real estate, but maybe you don't have all the funds or you don't have all the knowledge today. You don't know how to file an eviction. You don't know what to look for when you're screening tenants, right? You don't know how to negotiate, or you haven't had that experience negotiating properties. You never raised money, whatever it is, right? We all have these limitations starting out. And what you're talking about is you've built this platform that has some of the education and tools to help these investors as they're starting out, but also creating an investment vehicle that they can leverage where maybe they don't have the minimums that are typically required for these syndication deals. I want to go back first to the REIT point you made, because I think most people would say, okay, if I don't have $50,000 or $100,000 or whatever it is to invest in real estate, well, maybe I can invest through a REIT where those minimums are much lower, sometimes in the four figures, if not the five figures. So why not invest in a REIT? Or maybe you could give us a little bit of a comparison to REIT investing versus maybe what you have on the syndication side.
Sure. So first of all, I'm not an anti-REIT evangelist here. So, I'm not going to say that REITs are all bad, or that they're a bad investment. They're not a bad investment necessarily. If you look at their returns over the last 30 years, they're pretty similar to the S&P 500, US REITs, American REITs. So as a class, their average returns are somewhere a little over 11%, including dividends and price growth. Over that same period, the S&P 500 is somewhere like 11.7%. They're very similar returns over the last few decades. So the historical returns are not bad. They tend to pay high dividends, right? Because they have to by law. They have to pay out at least 90% of their profits in dividends. So, from that perspective, they're not a bad investment. My objection to REITs is that they have too close of a correlation to the stock market at large. And to get specific with you with numbers, there was a multi-decade study done by Morningstar that actually ran those numbers, those correlation numbers, and they found that U.S. REITs as a class shared a 0.59 correlation with the U.S. stock market at large. So, if for anyone who's forgotten their middle school math, 1 is a perfect correlation, right? Like lockstep. 0 is no correlation, and -1 is like a perfect inverse correlation. So 0.59 is actually, a somewhat close correlation, and that's in the same ballpark as a lot of other sectors of the stock market, like consumer staples. It has a similar correlation. There are several sectors of the stock market with a very similar correlation to the broader stock market as REITs, which makes REITs basically just one more sector of the larger stock market. So they share way too much correlation, but also too much volatility, right? Because that's a problem with stocks, is that they're bouncing all over the place. And I'll give you a really quick and easy example. So last year, 2022, the average U.S. REIT had a total return, including dividends, of negative 25.1%. The average home price in the U.S. rose by 10.1%. So there's a disconnect there. Not that all REITs are, residential single-family home real estate REITs, of course, but you can see that there is a disconnect there between what the underlying real estate markets are doing and what's going on in the publicly traded REIT market. And for reference, the S&P returned, I think it was negative 18.11% last year. So that is my objection to publicly traded REITs. It's not that they're bad investments. It's not that they don't necessarily have good returns overall. It's that there's too much of a correlation and there's too much volatility. I invest in real estate as a counterweight to my stock portfolio, right? I want the part of the purpose of that diversification is the lack of correlation. So just because my stock portfolio crashes, I don't necessarily want my real estate investments to crash alongside them or to stop generating income, right? So, the two complement each other. Stocks are great. They offer liquidity, and they offer a way to invest in companies of every stripe, in every country, small cap, mid cap, large cap, every sector of the economy. It's great for that. But I want my real estate investments to be as separate as possible from my stock investments, and REITs don't cut that. They don't cut it. So
I
that was
like
a
the
long-winded
way.
answer to your question.
Yeah, but I thought you framed it up beautifully, right? Talking about the correlation, because it's not that REITs are bad, it's just that it's just another version of the stock market, and that correlation is exactly what you're getting at. And ultimately it comes down to diversification, or your why. Why are you looking to invest in real estate as opposed to just dropping it in the S&P 500, right? And most people are looking to invest in real estate because they want an alternative asset. They want diversification from the stock market, and REITs really don't give you that. So investing in the real estate directly or through other vehicles is going to give you more of that diversification and helps you not have something that is so closely correlated to the stock market. So let's talk about the other challenge, right? Which I think you hit on a lot, which is the minimums, right? Typically on a syndication lease, we're looking at $50,000 minimums, sometimes 100,000, sometimes as low as 25,000. But very rarely have I seen minimums less than 25,000 on a deal. You've recognized this, and I know that barrier stops many people from being able to invest in a syndication deal. Talk to us about, why your minimums are a little bit lower, and just why you felt this was really important to have kind of a lower threshold so more people could have access to these deals.
Yeah. So, if we picked a random person off the street in the US and we asked what they have sitting in their checking account right now to invest, it's probably less than 50,000, right? I mean, most of us don't have 50 grand sitting around collecting dust, just looking for a home. And especially new investors, people who are new to real estate, who want to get started, they don't know how to get started, don't know where to begin with that. So we wanted to make these accessible to everyday people, people who don't necessarily make a ton of money, but who do have a solid income. They're looking for ways to diversify beyond stocks, like we talked about. And investing 5 grand a pop, while it's still not chump change, it's a lot easier to diversify across deals when you can split $60,000, say, into 12 different deals instead of having to plop all of that $60,000 into a single deal. And the reason I use that $60,000 example is that in a given year, we aim for an average of presenting one deal a month in our club. And these are with sponsors from all over the country doing every different type of property, retail, industrial, multifamily, mobile home parks, self-storage, in every different state, every market. And we try to just diversify as much as possible. They're presenting different deals in our club. So if someone has $60,000 to invest in a single year, if they were to invest that by themselves, individually in a syndication, they would have their money in one syndication, right? Or they could potentially invest that $60,000 across 12 different deals if they only have to invest 5,000 per deal. And at that point, it just becomes numbers on a page, right? At the end of that year, you're just looking at the average of how all 12 of those investments performed, as opposed to lying awake at night, gnawing on your fingernails because that one deal might not be going so well, right? I mean, it's eggs, baskets, you know the routine with diversification. But the broader you're diversified, the more it just becomes, again, numbers on a page. Some of the deals are going to underperform inevitably. Some of them are going to overperform. Most will be in the middle of that bell curve, and that's okay. It's a lot easier to sleep at night when you can spread your money among a lot of different types of properties, a lot of different markets, a lot of different sponsors. Again, because they're not all going to perform the same, right? So
Yeah,
helps
I
me
like
sleep at
that
night better
thinking.
anyway.
Well, I like the thinking because we all push for diversification. And to your point, if you have 60K and you put it all in one deal, well, now your anxiety may grow over this one deal and how that deal is performing versus the ability to spread it across multiple deals. Let's talk about kind of sophistication, right? Because one of the reasons people use minimums on these deals is to make sure people, they're comfortable that they can invest it, that they understand the risk. A lot of people will do a credit only deals because they want to make sure that that threshold is there. Talk to me about, kind of your approach and just understanding the sophistication aspect of it, particularly for people who maybe don't have as much capital to invest or to lose that capital, maybe in comparison to these deals with the higher minimum thresholds.
Yeah, no, it's a great question. So, again, we take education very seriously as one of our priorities. We vet these deals together as a club. So we invite all of the club members on with the sponsor to grow them together. So you get to benefit from listening to everyone else's questions of that sponsor and benefit from other members' expertise as well, some of which can be niche expertise. So, for example, in the last club meeting that we had a woman who was an insurance adjuster who was grilling the sponsor about their insurance projections, their insurance cost projections over the life of the syndication deal. And it was great to, to hear that, right? A few months back, we were vetting a deal that was in Dallas, and there was a woman who lived 5 minutes down the street from this exact property that we were vetting. So, she was able to tell us about the neighborhood, about that actual property. She's like, I drive by this property every day on my commute. So, she was able to tell us about the balance of supply and demand in that market. What kind of people live in that market, in that neighborhood. I've never even been to Dallas, so it's great to be able to crowdsource some of that information. And again, some people have niche knowledge, that are specialized knowledge beyond just broader real estate investing knowledge. But we also do presentations. We invite sponsors on to just give educational presentations to our club. We have a guy from Next Level Income coming on tomorrow to just teach about mobile home investing and how that works and how it's different from, say, multifamily syndication investing. So yeah, we are huge on education. We do free classes all the time. Every week we send out articles about both active and passive real estate investing, news about what's going on in the market. Every quarter we update our interactive maps of which markets are falling. Where are home prices falling in the U.S., where are rents falling. So yeah, we're very big on that. We don't have like a test that that our club members have to pass or anything before they can invest. Uh, but this club actually started as a perk or a bonus for our paid course that we sell. So, the theory was that, everyone was going to have a certain minimum expertise because they've gone through this course. And then we kept getting people asking, well, hey, can I just join the Go Investing Club? Can I just invest with you guys? And so Denny and I kind of looked at each other like, well, maybe, but I guess we need to talk to an attorney first. So we did. We talked to an attorney about it, and he gave us the green light. So that's actually how that was born, though. It was a side benefit of our course originally. Now it's open to the public and anyone can join.
I love it, man. And as I heard you talk, you talked about education a lot, but what really resonated to me was community, right? Having these people who have different expertise, different backgrounds, geographic differences. So when someone's talking about a deal in Dallas, or someone may be local to that deal, someone may have a specific knowledge base or background in another aspect. So as a group, when you're talking to these operators, you're vetting these deals, you're vetting these opportunities, everyone can learn because everyone is sharing information. And that community aspect, I think, makes it key. And beyond just the education, it's the fact that you can learn from everybody else and you can see what the group, thinks about a deal or thinks about a market or thinks about an operator. And I think there's so much value in that. Can you talk a little bit more about that community approach and why you think that's so important, particularly for newer investors?
Absolutely. So community is one of those things that people don't realize how valuable it is until they're a part of one. Uh, it's something that course creators, they don't spend enough time on, building a community for their students because people need social reinforcement, right? To reach their goals. You need accountability partners. You need other people who are walking the same path that you are at the same time and giving you feedback in real time, giving you peer-to-peer information instead of just top-down information. And like you said, they're having that community of people. There is always someone who asks sponsors questions in these vetting calls that we do, questions that never occurred to me or never would have occurred to me. And I'm always like, I'm so glad someone asked that because I wasn't going to ask it, but it's a great question. And it's stuff that we need to know as LPs in this deal, as passive investors in this deal. And that is the power of crowdsourcing the vetting of your real estate investments. You're going to get 50 different people's unique ways of thinking and unique questions and unique angles in approaching the deal because everyone thinks differently, right? So being able to pool all of those minds together, if you will, like a melding of the minds, it creates an organization or a community that is almost like a hive mind, right? Way bigger than any one individual person's mind or experience. So, I got a little, a little weird there, a little out there, but it's true. I mean, as a community, everyone kind of comes together to create like almost a super organism for vetting these deals or for anything for that matter.
I think the thing that's really great about it and the insight to me is that, even going back to the REIT conversation, you may be able to invest a little bit of money through different crowdfunding platforms. You can obviously invest directly on some of these deals if you have the capital, but putting that crowdfund together with community gives you really the best of both worlds, right? Where you can decide how much you're actually going to invest, spread that across multiple deals, but also have, other folks who can teach you and educate you and help you see things that maybe you would miss by yourself. So that crowdfunding approach, met with the community is a very powerful tool for anyone who's looking to invest. Again, particularly if you're new, but not just exclusive to newer investors. As you mentioned, you're hearing questions that you wouldn't have thought of, or angles or perspectives that maybe you wouldn't have thought of. So it's still very valuable for everyone who's there. So really insightful approach that I think can help a lot of people become better investors, even beyond just the traditional education that may be out there. For folks who, are looking to build communities, whether it's raising capital for deals or, whatever the case may be, you've obviously been able to build a really engaged community with SparkRental. What are a couple of tips or insights or misses that you see people make that you would recommend people follow moving forward?
Yeah, I think that it helps to have a shared mission for the community that's very tangible and very clear, and involves some kind of direct action, right? That's So I'll give you an example. We have a Facebook group it's huge. It's one of the largest Facebook groups for real estate investors. It's got something like 47,000 members, and it's great for sharing information, but it doesn't have that same sense of like shared mission or hands-on shared purpose. So you can go in there and you can ask a question and you'll get some answers from it, but it's not the same as our much smaller co-investing club, where we are on video calls at least once a month together, actually vetting deals together, grilling sponsors, proposing names of new sponsors, that a member of the club knows and likes or trusts. There's just such a deeper sense of community and a deeper sense of shared purpose when there is some stated mission and some kind of tangible hands-on action that everyone is taking together. So in our case, it's passively investing in real estate syndications, right? But whatever kind of community you were looking to build, if you can build it around some kind of shared action, I think that just makes it much more powerful, and just gives it so much more focus for its members.
I love that, right? Having a clear vision, having a clear purpose, um, those things are critical, right? Because people want to know, well, why am I here, right? Why am I joining this? What am I getting out of this? So the clearer you can make that mission up front, the more involved you will get from people. And I think too, it helps to reinforce your own vision, right? If you're saying, hey, I want to help people invest passively in syndication deals, well, now that doesn't necessarily mean, okay, we're just going to bring on operators to pitch their deals. It means, okay, well, we need to educate them. We need to figure out this. We need to figure out that. You know what? People are having this issue. Why don't we address that issue, right? It's really providing more of a holistic solution, if that truly is your stated mission, versus just, hey, I want to do X, Y, Z. So the clearer you are, I think the more likely it is to drive that kind of engagement. But it also is a commitment, right? I mean, you got to really commit the time, the energy, the resources to creating kind of that environment, but also coming up with those solutions. You mentioned that when you first started the investment club, it was really kind of an added bonus for your paid members. And as I was listening to that, I was just thinking about, like, man, the legal challenges that you must go through, right, to get it all set up, and what does that look like? And I know people may be interested in maybe doing their own investment club, or just, pulling money together amongst a small group of people to invest in a deal like this. What are, like, just some things you've learned through that process that you would share with anyone who is thinking about maybe launching their own investment club?
Yeah, so you can do it. Friends and family, go ahead, get together, form an LLC. Pool your money. Make sure you have a good operating agreement, of course, that lists lists everyone's rights, responsibilities, ownership percentage, et cetera. But what one of the things that's very important to my co-founder Denny Sapli and me is to stay very far away from the line of selling securities, right? We are not selling securities. The last thing we want to do is run afoul of the SEC. So we can't take a cut of any of the money that's invested, right? Because then we would be selling securities. So we charge a flat membership fee in our investment club, and that's the only revenue that we earn from this investment club. And in fact, so not only do we not take a cut of the money that we bring together as a club, we actually invest our own personal money in almost all of these deals. So we're right there in the trenches participating alongside of our members. So, I think you just have to be really careful to know where the line is. Speak with an attorney, if that will make you feel more comfortable, and you probably should speak with an attorney. But yeah, don't take a cut. Just keep the accounting really squeaky clean. We set up a separate bank account, a separate LLC, a separate bank account for every one of these deals. It's very, very squeaky clean, and it has to be, right? Because neither my partner nor I wants to end up in prison. So
great advice, right? I mean, first of all, talk to an attorney. Get somebody who's going to help you set it up the right way, manage it the right way. If it's you and your family and friends, make sure you got a clean operating agreement. But just make sure you talk to somebody who can help you set it up the right way and get clear on kind of the vision, the mission, how decisions are going to be made, and you can set yourself up for success. And then obviously you can also just reach out to SparkRental directly and join what they've got going on. So again, if folks want to learn more about SparkRental, they can go to your website, SparkRental. Is it SparkRental.com?
SparkRental.com. That's right.
There you go. So go check that out there, learn more about Brian and his team, and check out all the free information they've got there, as well as some of the other resources that are available. Brian, we're going to move on to our round of insights. Are you ready?
I guess so.
All right. Well, ready or not, here we go.
All right.
Give me a failure or an apparent failure that sets you up for later success.
Sure. So I touched earlier on the fact that I went out and I bought a whole bunch of properties in my 20s that I did not learn how to screen properly or to analyze properly. I didn't even know how to forecast cash flow accurately. I'm sitting there buying properties and I'm still thinking that cash flow is the rent minus the mortgage. Yeah, I know. So the first lesson there is find someone who knows more than you do and learn from them, right? I just had this hubris of youth that, I can do this myself. I'm going to go out there and I'm just going to do it. Get help, get expert help, whether that's a mentor, a coach, a senior partner, even just going out and reading 100 blog articles and listening to 100 podcast episodes. That is better than what I did. So get help from experts. Find someone who's done it before you. Learn from their mistakes. You don't have to make them yourself.
Give me a digital or mobile resource you recommend for your business, obviously outside of SparkRental.
Sure. So I love Evernote for just keeping track of my thoughts. If I don't write things down, it'll be gone 10 seconds later, right? And I may not ever come up with that idea again until it's too late. So Evernote for me personally. For my business, this one is overdone, but just using Calendly to let someone else schedule my calendar for me. I used to manually schedule every meeting, and it would be all this back and forth. Now I'd say, here's my link, schedule a meeting and we'll talk then. So I don't have to worry about it anymore.
Give me the book you've recommended or gifted the most in the last year.
So, I love Personal Success Made Simple by Brian Tracy. By the time he wrote that book, he was a big enough personal finance celebrity that he was able to get a little weird and, a little like kooky in that book and, talk about things like, law of attraction and stuff without being labeled a whack job. So, it's a great mix of both like the just gritty, hands-on, totally practical stuff, and also some of the less tangible mindset changes that you really need for success. So that's the personal side. On the business side, check out the $100 Million Offer by Alex Hormozi. It's a great way to make an offer that people can't refuse.
Give me a daily habit that helps you stay focused on your goals.
So I work out every day, and that helps keep me, level mentally and emotionally. It's a form of therapy for me, but also just the basics of, eating reasonably healthy, getting 8 hours of sleep. I meditate for 10 minutes a day, nothing crazy, but just enough to kind of remind yourself every day to have a gratitude practice and to, have a mindfulness practice. It's just those little reminders to not take yourself so seriously, not get so caught up in the day-to-day swings, because otherwise, the day-to-day mood swings will just push you over the edge.
Give me your number one insight for diversifying your investments.
Well, I mean, I want to say, go join a club like ours and, and invest small amounts. But I tell you what I'm big on is dollar cost averaging. So investing the same amount month in, month out, or week in, week out. I mean, I have a robo advisor set up for my stock investments. Every week, pulls the same amount of money out of my checking account and invests it automatically in a whole bunch of different index fund ETFs, rebalances it for me, does tax loss harvesting for me. I don't have to think about it at all. But that's an easy way to both diversify and not just diversify across different investments, but to diversify over time. And I do the same thing with my real estate investments. People think that you can't dollar cost average with real estate because it costs too much money. That's not true if you are investing small amounts in, public REITs, like, which you can do, or crowdfunding platforms or real estate syndications if you're investing small amounts in an investment club. But month in, month out, invest small amounts in it. And that will diversify you over time as well, so that you are earning just the market returns on those, over the course of 10 years, as opposed to, trying to time the market and inevitably getting it wrong.
Yeah, great advice right there. Let's lighten the mood, man. Where are you located right now?
I am in Lima, Peru.
All right, man, it's amazing. Good for you. Give me your favorite place to grab a bite to eat in Lima.
So there's a little stand next to a playground that my daughter loves. I've got a 3-year-old daughter. So sometimes she and I will go there, I'll take her to the playground, and then afterwards we'll get a chicharron sandwich. So it's like a fried pork sandwich with pickled onions and sweet potatoes, basically. And it's spectacular. So, for $3, I enjoy this big overflowing, fried pork sandwich. And you can't beat it. And it's right there at the top of this cliff overlooking the ocean. So she and I will sit there and enjoy a chicharron and watch the sunset.
I love it. And were you in Philly before? Is that?
Our business, my business partner is based outside of Philly. So our business is based with her. I grew up in Baltimore, so that's where I'm from originally.
Got it. Awesome. How long have you been in Peru?
Just a few months, actually. We got here like 4 months ago. We lived in Brasilia, the capital of Brazil, for 4 years before here. And then before that, we were in Abu Dhabi for 4 years. My wife is a school counselor, an international school counselor. So she works at like U.S. embassy schools around the world, helping teenagers get into college.
Yeah, I love it, man. And we obviously didn't spend a lot of time talking about that location independence and financial freedom and all that stuff. But obviously, you're able to travel the world and live in different places and raise your daughter in different places as well. And I think that's really cool and awesome. And I'm sure lots of folks may have questions for you on that front. But if you are interested in learning more about Brian or SparkRental, reach out. Go to SparkRental.com. Check out some of the free resources they have available, and check out their investment club. Lots of great information. Brian, I just want to say I appreciate you spending time with us today, talking to us about your perspective on diversification from an investment standpoint, why real estate, why you and I, again, a lot of people listening like real estate, but also the approach, right? Why you prefer direct investments over REITs, how to invest in different syndications, why you like having lower minimum thresholds, deals that do allow for sophisticated investors and are not limited to just accredited investors, and helping kind of that everyday investor get access to some of these deals, which I think is a great opportunity for a lot of people. Again, if you want to learn more, check out SparkRental.com. Brian, thank you again for being a great guest coming on Multifamily Insights. We look forward to staying in touch with you and hope you have a great day.
John, thank you so much for having me. This was a blast.